a lot of discussion about the impact from coronavirus and even the Boeing 737 delays, Steve. But Steve Liesman, I should say, is here for reaction. But the market is taking it in stride. We're still up near session highs.
Yeah, I think it's in line with what the market might have expected. I could put a little context on it. Diana did a nice job of counting the use of the term coronavirus and COVID-19. When we were in the throes of the trade or the tension wars, trade wars and tariffs, that word appearing 50 times or more in the Beige Book was something that was pretty common. And we were counting tariffs and trade and all that stuff. And by the way, when it gets up to in the 40 or 50 range, it tends to be something that affects policy. And you know that the trade war affected policy last year, and it's already affected policy this year. But we step back and maybe give the more important analysis here, which is that if I put the Beige Book calling for modest and moderate growth, together with the ISM service number this morning, together with the ADP number, I think it's undoubted we're going to take a hit here. I would say we're in pretty decent shape with which to take it. I think that's an important place to come from. I think the economy is probably ex-Boeing and ex-Corona would probably be running about 2%. If we are lucky here, and I don't think it's a crazy thing to think about getting a 1% hit from coronavirus over a couple quarters with a bounce back after that, it would not be the worst possible outcome. And just please, I'm not talking about the human tragedy that befalls people. I'm simply talking about the economic numbers here. But it's a good thing to see we're going into this with pretty decent health, certainly in the service sector. Manufacturing sector still going to be experiencing problems from the trade and the tariffs, which are very much still in place.